Hey, it's Rick for Wednesday, December the 7th. Our risk model has deteriorated quite substantially over the last couple of days. Yeah, pretty much everything is red again. I'm not sure I've mentioned this before, but this is really a kind of a shitty market. And cash is probably the best place you could be. In fact, I think I've been saying that now for 12 or 13 months, but yeah, it's really tough sledding. Just have a look at the indexes and what happened to a couple of my positions, and why I'm almost all in cash now. S&P, I mean, we had this great big move here off the Fed announcement, and then just gradually drifted all the way back and it wiped out that entire gain. And so we're right back to where we started 6 days ago. So right now, the only thing holding us up now is the 50-day moving average. We're above that on the S&P. I guess you could argue we're still in a short-term rally here, the bear market rally, but stretching it a little bit. The Qs are a little uglier. Quite a bit uglier, actually. We're substantially below the 200. And now today we close below the 50, as well as the 21-day and the 8. Yeah, this basically mirrors the S&P 500. Situation is not much different with Toronto, although it's a bit stronger. Get some of my lines out of here. 1, 2, 3, 4 days down after this gap up. So we've actually undercut that big day from a week ago on the Fed announcement. So now closed below the 200-day moving average. So things not looking brilliant in Toronto either. Back to the Qs for a second. There is a potential for a trade setup. Actually, I'm going to go to the 2 times leveraged QQQ, which is symbol is QLD. So this one travels twice the speed of the QQQ. So if the QQQ is up 1%, this one goes up 2, and conversely, if it goes down 1%, this goes down 2. So what I've noticed here is we took out this previous low from the day before the Fed announcement, but then it rebounded off that. So there is some support in this area in here. Not saying that if that support doesn't hold, then of course we're headed right back down to 3,400. So it's 10% away from here. But what strikes me here, these moving averages, the 50, which is this bluish one, the 21 and the 8 are all converging. And when this happens, you usually get an explosive move, generally in the direction of the prevailing trend. Now, it's probably stretching it a bit, but I think you could argue that this prevailing trend is slightly up. So if I draw a box around this last trading range here, so you could let's extend this out over here. Yeah, you could argue that this is an uptrend. So what I'm looking for is if we get above today's high, I would be a buyer here with a stop just underneath the low. And so the risk reward on this is about 3%. So I wouldn't, take a smallish position. But the odds are, if it does take out that high, then we could get an explosive move back up. And just to put this in perspective, if it goes above this high and just gets up to the previous high, that's a move of, let's get my tools to work here, about 9%. So it's 3 to 1. And it's not inconceivable that this could actually come over the, it wouldn't do it all tomorrow, obviously, but over the next couple of weeks, it's possible this could reclaim the 200-day moving average, or at least get up close to it. That's a 28% gain using the double leverage QQQ. So for a 3% risk and the possibility of taking some off at 3-1, and then maybe getting almost 10-1, this is going to be a compelling trade for me to keep an eye on first thing tomorrow morning. So, but again, the caveat is this has got to be going up, so it's got to take out today's high. And today was a pretty narrow day, so as I say, the risk reward then is not that big if you just use today's bar as your entry point and your exit point if we're wrong. Couple of things on my mind. Very frustrating. ENPH, which I was in down here at 305, 306 something. Got a 10% gain on it. Fortunately, I took half of it off up here at 336. And I wouldn't normally have a 10% stop on the balance, but that's what I did. I left my stop at break even on the balance of it. Because it's not going to come back 10%, right? That's just way too much. Well, guess what? Yesterday it did that. And even more, it went down even more for today, and then it now looks like it's rebounding. So this may get set up again. In the end, I mean, I got half of it off at least for a 10% gain, and the other half a break even. So it wasn't a bad trade, but nowhere near what it could have been or should have been. So this is, if this tightens up, we may get another reentry. ISSC had a very small position. Again, it just crapped to bed. It's got a waterfall now, so it stopped me out up here. So tiny break even, but I got a little bit of slippage, so it's a tiny loss there. MGPI, I don't know if I talked about this one. It was a nice move. I was in here, went up here, and then look what's happened here. It just fell out of bed. And we're just seeing too much of this kind of stuff happening, that this is just a dangerous market to be in. The one that is bucking the trend, which is now my biggest position because I added to it today, is Regeneron. I'm in here at 733, 734. And we touched 767 today. So what is that? $30. It's about a 5% move. So I added to this position today over here at 755, and I've moved my stop. I'm now sort of chicken shit. I'm taking my stop and put it right under today's low. So the worst case is I lose a little bit on this one, make a bit on this one, and come out break even. I'm just not going to give any rope. A logical stop would be down here somewhere around 717, 718. But I'm just, with this kind of a market, I'm just not going to do that. And I still have the biotech index quarter position left in from way down here at $55. We're up about 10% on that. Has been a lot higher, but. And then I entered a new position today, and it's already starting to fail. It's a good pattern. It's coiling here right near the all-time high. These pullbacks are getting shallower, and I entered on this above this yesterday's high, but then it immediately is what we call a squat. It just closed near the low of the day, so we're not off to a great start on that one. I do have half my stop. I have two stops in two places. I have a stop underneath here for half of the position, and one way down here for the other half of the position. I'm going to give this some breathing room. So again, it's not a large position, and I fully expect the way the market's going, at least half of it's going to get taken out probably tomorrow. But then this should hold. If it doesn't, then we really are in a shitty market. Okay, that's about it. Stay safe. Most of you are probably still in cash. It looks like we got another few weeks yet of this kind of crap to deal with. So it's only good for short-term trading and can't even call it investing. So keep your powder dry, hold the faith. It'll come back. We'll get to a bull market yet. Okay, cheers everyone.